Welcome back. You know Anthropic, the huge AI company, well, it is now racing towards becoming a public company, meaning that soon you would have a chance to buy or sell its stock. Here's the thing, though. We're seeing more and more reports of investor concern about the highly anticipated IPO. So what's going on? Let's ask Doug Flynn. Flynn, Zito Capital Management, joins us right now. So the thing, you know, and there's a Wall Street Journal article about this, is that Anthropic is trying to shore up the investor confidence because all this Chinese competition, the DeepSeeks of the world, seem to have people a little bit rattled about, I guess, valuation and what the publicly traded Anthropic will look like.
Yeah, look, there's no question this company has great growth and potential, and their Claude AI is a great revenue driver. But Chinese competition is certainly there. You have the data center costs. You have energy cost issues, and at the back of all this is just whether or not this is all going to be worth it. Is it going to translate into long-term profits? And so what's happened is it's sort of shifted from the overall, is AI going to work, to is AI going to pay off? And that's basically what this is. It's a little bit more of a deeper analysis on the pricing and whether or not the IPO price that's going to come out is really reflective of the true value or not. And that's where the questions are really coming in.
Well, it's interesting, that larger concept about whether all the bets on AI are going to work. You talk about it through the lens of Nvidia for a moment, because Jensen Huang, the Nvidia CEO, you know, he's being, I guess, endorsed by Wall Street in a big, big way. Like, you know, the big money managers, the BlackRocks of the world, they're spending a lot of money on all of this. They're behind all of this. And, you know, that raises that same question about now what, right? You gotta come through.
Yeah, Wall Street's funny. When you bring them in, look, it does a couple things. One of the things it does is it spreads the risk now away from just the tech companies and their spending and raising, but over to Wall Street. And what Wall Street will notoriously do is they will take this and they will whack it up into tranches, they like to say, and pieces, and they'll sell it all out to a bunch of individual investors. So, of course, that spreads out the opportunity, but it spreads out the risk, and therefore, what happens is if it doesn't work out, now it's not just isolated to the tech area, but across all of the Wall Street firms and therefore individual investors. And I think that could be a blessing and a curse, so to speak. So they're trying to raise $500 billion and doing it in this way. And of course, Wall Street, if it has a new product that it can do this with and sell it to investors, it's going to do it. So there's some pros and cons to this, of course. But that's the play here, is not just keeping it within the tech world, but spreading it out into Wall Street and then Main Street, really.
But as you sit here now, all things AI, you're more bull or bear or skeptic or optimist, or?
I think the productivity gains are just astronomical, and I think we just really have gotten started there. I think, like anything else, there's this shifting that's going to go on, and I think the opportunities are really there. I don't think they're just, you know, endless and that they're all going to win for sure, and that's why you have to be discerning in what you do. And there are some issues on whether or not the revenue is going to work, so you have to be careful on what you pay. You could take SpaceX as an IPO or any IPO. Just because it's a great company doesn't mean it's going to come out at a great IPO price, or that it's going to have a great return after the IPO. They're two separate things. So there is a lot of opportunity, and so therefore with that comes some risk for sure.
We have like 90 seconds before the bell rings. Perfect. I wanted to talk to you again about the K-shaped economy, but in a different way, because you and I talk about this all the time for probably years. The closing of the K is a different conversation. The K-shaped economy basically is the rich getting richer, the poor having a tough time keeping up, and it looks like a letter K when you look at things like spending. But if you look at total card spending across all income groups, and you see this at this chart on the left side, everybody's spending more now. And after-tax wages and salary growth by household, the top 5% are in green, and those numbers coming down a little bit, coming into the pack. So, like Scott Bessent, the Treasury Secretary, was asked about it. He basically said the other day, or he made this proclamation on TV, this K-shaped thing's over. Is he right, or no?
Well, I think the trend is definitely moving away from the K, so that's probably a true statement to a certain thing. I don't know that it's over, but we definitely have the continuance of the consumer. We all know that's about 2/3 of the overall economy, and they've maintained an unbelievable amount of that spending continuance. It has shown up on some of the credit cards. Originally, it was focused on sort of the higher end, as sort of the lower end struggled a little bit, but some of that the higher end has come down a little bit. So some of this merging has to do with the lower end is definitely definitely coming up a little bit better than expected, and the upper end is coming down. So it's kind of coming together, if you will. That's not a bad thing. We want things to be spread out and not just concentrated on the top, whether it's income or spending or anything. So I think it's a good sign.
If it continues, right? Because we spent so much time the other way. So let's see if it really is reversing that trend. Thank you, Doug.